September is historically the worst month in the stock market. So are we prepared for what could be a pretty volatile month? Let's find out on this edition of the Video Market Update. September historically has been the worst performing month, and it's not even relatively close. On average, September is down about 1.2%. Now you would say, well, that's not really that big of a deal. And I think that's true, but when you see positive months and then you see one month that is almost always negative, it makes you pause and say, why? Now, historically, there used to be this thing that was called sell in May and go away. All the traders would sell their portfolio, they'd go off to the beach, they'd come back after Labor Day, and then they would realize all the things they need to be doing to their portfolio, and that would drive a lot of selling, a lot of volume, a lot of buying and selling. With computer automation, that's really not the case, but we still are having negative Septembers. In fact, 6 of the last 10 years, the S&P 500 has been negative. And if you go back 21, 22, 23, those were all negative, and in some cases, fairly aggressively negative, down like 5%, although last year bucked the trend. In that same period of time, from 21 to last year, the bond market was negative in all years but last year. So you would say, well, what does that have to do with this year? And in fairness, not a lot. Each of the events of the last few years are what caused September to either be negative or positive. Like last year, there was anticipation and optimism of the future presidential election. So the market was anticipating and was positive. The years before, we were dealing with negative inflation and higher interest rates. So what about this year? What makes this September potentially different? Well, there's a couple of different things, right? Recently, the courts have determined that the Liberation Day tariffs, most of them were illegal. So then what happens? Does that get executed and rushed up to the Supreme Court and they decide? Do they essentially get put on the sideline for a few months until they can try to rework them to what the courts would deem as legal? I don't know, but that's going to have an effect in September if in September now there's uncertainty around the tariffs. We know that the Federal Open Market Committee will meet this month to determine if they're going to cut interest rates. I think all indications are that there will be at least a cut in September. So does the market look at that and say, ooh, a cut, that's going to ease how tight we are with interest rates? Or is the market going to say they're cutting interest rates because we're seeing a softening economy? And then there's also just, are people starting to make year-end plans? Are they starting to sell their portfolio to take care of required distributions? Are they selling for tax loss harvesting? So again, I think you're going to see this as a kind of a pivot or a hinge point for the rest of the year. Will it be volatile? Yes. Will it be negative? We don't know. And so as always, the answer comes back to, do we have a well-diversified portfolio that puts us in a situation where if the market goes up, we take advantage, and if the market goes down, we'll feel it. But do we have some protections on the bottom to kind of soften that downturn? So this will be something we'll talk about the entire month. This is just the first opportunity to talk about it because we're now in September. So if you have any questions on this or anything you're seeing in the news or in the market, let me know. But if not, as always, I hope you make it a great week.